Welcome back to Business Edge. We're going to be looking at some earnings reports that have been released at the Nigerian Exchange as the market begins its earnings season. We've had earnings from Stanbic IBTC, Okomo Oil, Presco, and a number of others. Well, joining us for this conversation is Vincent Oshoma. He's the head capital market at Interstate Securities. Vincent, thank you for joining us today.
It's a pleasure. Good morning.
Well, a number of earnings reports have come through at the NGX. We're expecting more. And I know that if there's one sector that investors at the market will be keeping an eye on is the earnings from the banks. I believe we have seen earnings, correct me if I'm wrong, from Fidelity and Stanbic so far. From the banking and from the agricultural sector, we have seen Presco and Okomo Oil. Perhaps let's start there, Presco and Okomo Oil, the numbers from Okomo Oil. Seeing that, well, as far as the turnover is concerned, up 44% year on year. Profit after tax also up 22%. So not terrible numbers, I mean, given the environment. But I'd like to hear your thoughts going through the line items for a company like Okomo Oil. What do the highlights tell you?
Yeah, I quite agree with you. When you look at these numbers and looking at the situation in the country, you will say, you said it's not so bad, but I will say it's impressive because of the challenges that have been faced in the economy, and especially for companies that are not in the financial sector. When you look at finance costs and also the challenges in the environment due to the removal of subsidy and some of the reforms that have taken place, there have been inflationary pressures. So them having this kind of result, growing their revenue by 44% year on year, I think it's a good result for them. Investors.
Right. What similarities do you see between, I mean, when you look at Okomo and Presco, obviously in the same business line, what similarities do you see? And did you see any pressure points for these companies that you think could potentially be a challenge going into the financial year?
Yeah, if you look at the challenges they are facing, is the fact that there's an increase in their cost. But for Presco, they were able to manage their costs more efficiently. And when you compare their revenue to their cost, you can see that they did well. Like I can attribute that because when you see their revenue growing by 27% and their PAT growing by 103%, remember there was an acquisition of Seattle operations in Nigeria. And I think that helped in growing their revenue, and also with removing some of the inefficiency in the system. I think a result of synergy, they are able to reduce their costs because they have their cost is almost similar with the previous year. There was no real growth in cost. I think that helped in pushing their PAT up by 103%, which is impressive.
Right now, for the banks, let's talk about your expectations. We'll come back to the consumer goods sector. For the banks, what are your expectations in terms of the kind of, we know that, I mean, I'm sure you remember the stellar numbers that the banks reported last year due to the FX revaluation gains that they had last year. But I mean, the challenges, the Naira continues to weaken, as weakened further this year. So I suppose that's something investors will be keeping in mind as they await bank earnings come through. But what are your expectations in terms of what they report as turnover, also interest income and non-interest income?
Yeah, when you look at those factors you mentioned, the devaluation, it's expected that the banks will post very impressive numbers from their final result. Also, like we saw in the 9 months result, it was impressive. So the fact that we have had further devaluation after the release of the 9 months result, that means we expect to see increase in revaluation gains for them and also their interest income. And I think investors are looking forward to that, especially for the tier 1 banks, the major tier 1 banks that have not released their result as a result of awaiting CBN approval. Also, you know, this policy of releasing results, fourth quarter results, so to allow you release the result after 90 days. And some of the tier 1 banks, very big banks, they opted for not releasing the fourth quarter results so that they can just release the result after about 60 days when it becomes due. I think a lot of persons are looking forward to the result by those banks because we expect them to do better than what they posted for 9 months. And also, we believe it's going to affect their dividend payment, which investors are looking forward to.
Well, I was going to come to that. I mean, the dividend yield, I mean, especially within the Tier 1 space, the likes of Zenith, UBA, FBNH, and a few others. What kind of dividend payments are you expecting?
Yeah, we expect an increase in their dividend payout in terms of the actual value. Because when you look at what happened for their interim dividend, a lot of them, they increased there. There was an increase there in their interim dividend, especially for UBA, where we saw an increase there of from 20 kobo to 50 kobo. And the Zenith Bank and GT increased from 30 kobo to 50 kobo. So we expect that their final dividend, there will be an increase in their final dividend. You remember that for 2022 financial year, Zenith paid 290 kobo, while GT paid 80 kobo. We expect an increase from that figure that was paid last year. So I think investors are looking forward to that.
Let's go further into their operations for the year. Obviously, it's another year for the banks, and it's another opportunity for them to grow their loan book and, of course, find good businesses within the Nigerian economy. Many of them, I imagine, will stick to traditional sectors like the oil and gas, for instance. But in terms of loan book growth, what are you expecting? I know that they've been quite conservative when it comes to their loan book growth, perhaps somewhere around just under 10% or just under 10%. But when one thinks about their financial intermediation role in terms of how they also contribute to growing the real economy going forward, a very critical year for those reforms to begin to take root. What are you expecting in terms of how, what kind of risk, the risk level or risk appetite for these banks will be this year in terms of how they expand their loan books?
We expect challenges with respect to growing their loan book. When you look at inflation currently at over 28%, I think, and rates being high at the moment, I think it will be challenging for people to actually borrow, coupled with the challenges in the economy. But it depends on what we see from the government in terms of reform. Like the CBN governor talked about trying to target reducing the inflation rate to about 21%. I think that will help in reducing the cost of borrowing. Because when you have a high cost of borrowing, people are discouraged from borrowing. So the government's ability to adopt some reforms to bring down inflation and also to enact some economic reform in different areas will determine the ability of the banks to grow their loan book. Because when you look at the economy, there are a lot of sectors that requires reforms to attract investment. And when you have reforms in those sectors, the investment, most of the investment will come from the bank, borrowings from the banks. So I think it has to do with what, as the year, in terms of CBN reforms as well as government reforms, I think it will help banks in their ability to grow their loan book. But looking at it currently, it's quite challenging with inflation currently quite high and also the economy quite challenging, especially for the disposable income of the average Nigerian. So the ability of companies to increase their investment will probably be challenged.
Yeah, that was going to be my next question in terms of what that general theme you imagine will be in terms of what the numbers will tell us. I mean, Presco and Okomo, the numbers are quite impressive given the environment. So one would imagine that even in the midst of the economic downturn, the cost of living crisis, and of course inflation pressuring the pockets of the average households in the country, that would should typically reflect in some of the numbers across the sectors. But I think we'll leave it there for now. Let's have more of the numbers come in, especially from the banking sector, and then perhaps we could take the conversation further. Well, thank you so much, Vincent, for talking to us today. We appreciate your time on the show. Vincent Oshoma, Head Capital Markets at Interstate Securities. We'll take a quick break, and I'll be right back with our next conversation. Join us again. Welcome back. Nigeria's Ministry of Power has set up a committee of all stakeholders in the power sector to resolve the challenge of low gas supply to generation companies, which it says is responsible for the current poor power supply in parts of the country. According to the Minister of Power, Adebayo Adelabo, in a recent statement, the committee is expected to make recommendations that will address both the gas supply and liquidity challenges in the sector. He states further that in order to achieve an immediate impact, the Ministry of Power and the Ministry of Petroleum Resources will work out a template to prioritize gas to power to improve electricity supply nationwide. Well, joining us for this discussion is Chinedu Amah. He's a founder of Spark Nigeria. Chinedu, thank you for joining us today.
Thank you very much. Good morning.
Good morning to you too. Let's get right to it. You're obviously very much aware of that grid collapse that happened recently and the power outages across the country. I mean, that was pretty much the theme for the power sector in 2023. Now we've had the first one already in the year. But the Minister of Power has said that he is setting up a committee with all the stakeholders, and he has identified a poor supply of gas to the GenCos as the generation companies now, which he says has been the problem. But what are your thoughts when you think about how all of that has played out?
Thank you very much for having me on the show. Personally, I don't think we need to know about committees that are being set up, because these are internal processes within an institution that the action they take or fail to take, the outcomes, or the ones they failed to take in the past, the outcome is what we're experiencing today. So whether you set up a committee or you do not set up a committee, that committee cannot guarantee that there will be gas supply. What has impacted gas supply infrastructure should be, in simple terms, conversations between service providers. And the Honorable Minister, with all due respect, can speak to that. But personally, I think we need to be in a space where we're speaking to solutions. We're still waiting to understand what his policy thrust is. Setting up a committee to look into why there is gas supply shortage. My dear, I'm sorry, but I don't think a lot of value will be created from that committee. It's probably going to be another excuse to have people who are going to sit around tables and have long conversations, and value creation will be near zero.
Chinedu, if I could just come in here, well, he did also mention in terms of what the ministry could do to sort of have an immediate impact on the situation. He talked about partnering with the Ministry of Petroleum Resources to work out a template to improve gas to power supply. That was a little vague, and obviously we probably would need to wait for the outcome of that in terms of what the framework is, what they're going to do to achieve a quick win, if you will. But what do you imagine could be done or would be new in terms of addressing the situation right now?
Okay, so if the Honorable Minister had a position that is clear on the challenge that occurred, then he would have told us that pipeline XYZ was impacted by an action of certain non-state actors, or that there was a downtime in supply to generating companies. You do not need a committee or a partnership with the Ministry of Petroleum Resources to find quick win solutions to the challenges that the industry is facing at this time. The Honorable Minister had a meeting. He had a retreat in December last year, in which stakeholders were meant to have discussed challenges in the sector and define a policy thrust for his time in office. We are still expecting the information or the documentation from that retreat. At this time, this is 2 months after, we are seeking quick wins to challenges that should or do only exist between service providers within the sector. So whether you form committees or build partnerships within ministries, they have interministerial meetings. It shouldn't be a conversation that you and I are being told will happen. These are conversations that should have started to happen from the very first moment that these ministers were appointed. So it still goes back to the same problem we faced over time, reactionary positioning of governance rather than proactive positioning to ensure growth.
Right.
we've fallen below 4,000 megawatts once again. So clearly there was no plan, or there is no plan being implemented to shift the needle from 4,000 megawatts to the so-called 7,000 megawatts that they claim is available. Clearly, this isn't proactive. It's not working for us.
If I just come in here also, there's also the issue of, Chinedu, I do beg your pardon. There's also the issue of debt being owed to Gencos by the bulk trader, Embed, the bulk trader. The Ministry of Power says that, the Minister of Power did say that the ministry is currently validating those debts to see how they can be quickly offloaded and settled with the Gencos. To what extent is this part of the issue here?
Once again, that's a conversation that has nothing to do with the power supply situation that we find ourselves in. As a nation, we are currently supplying less than 10% of our energy needs, or generating less than 10%, and supplying less than 50% of our actual generation capacity. Settlement between NBET and generation companies is a stakeholder conversation within the industry. It shouldn't be something that is at the front burner of our conditions today with respect to our power supply. Yes, we understand that there's liquidity crisis. Yes, we understand that the Gencos require their monies so that they can improve their capacity and expand their capacity. But these are conversations that should be had outside of the public space. If we are proactive, we should be speaking to timelines and plans to improve supply to Nigerians. We shouldn't be speaking to stakeholder conversations that should happen in the back office. So I'm not seeing any proactivity here. NBET, Gencos, it's a side conversation, not a conversation that we should be having.
But Chinedu, I hear you, but when you get to a point where it begins to affect the last mile, the discos who are then unable to distribute power to customers, you and I, who use power, who use electricity, wouldn't the onus then be on the sector regulator, either NERC or the Ministry of Power, to come out and say something to at least let everyone know that this situation is being addressed?
Okay, so NBET's outstanding payments to generating companies is a conversation between a government institution and private institutions which provide services through the government institution. I've been one of those who have had presence of that intermediary called NBET. Not NBET as an institution, but their intermediary role in the sector. That intermediary role was or became the tool that ramped up the capacity or the size or the volume of subsidies in the sector, because they managed that interchange. They built up depths in the sector because they managed that interface. These are conditions or conversations that should be held in camera. Solutions can be reached between both parties without dragging you and I into it. Where you and I come into the conversation is where you're stating, or where the ministry is saying to us that, hey, Nigerians, look, these are our plans for the next 6 months. These are our plans for the next 5 years. Under the last administration, we saw the Siemens project. We saw the details of the Siemens project. And because they provided that level of information, we can measure and say, oh, the Siemens project has failed, or so far it's failing. But when we don't have a plan that defines where we want to go as an industry, and there is a continued conversation around indebtedness to generating companies, I think we missed the plot there, because it tells us that we are not looking for how to move forward.
Chinedu.
We can set up internal teams within the ministry to resolve past issues. But what are the plans to move forward?
Well, Chinedu, I guess we'll have to wait and see. It's definitely a developing situation. We'll have to wait and see what the Ministry of Power comes up with. But thank you so much for talking to us today. We appreciate your time on the show. That was Chinedu Amah, founder of Spark Nigeria, looking at some of the gas to power challenges in the country. We'll take a quick break and I'll be right back with the rest of the show. Welcome back. Zambia's finance minister said on Monday he could not give a timeline for a debt restructuring deal with private creditors, while the International Monetary Fund's Africa director urged all sides to compromise. Well, Zambia was the first African country to default on its sovereign debt during the COVID-19 pandemic in late 2020, and its protracted restructuring efforts have been beset by delays. It suffered a major setback in November last year after a revised deal to rework $3 billion of Eurobonds was rejected by its official creditors, including China. Well, joining me for this conversation is Peter Mumba, Coordinator, Civil Society Debt Alliance. Peter, thank you for joining us today.
Hi, Esther. I'm glad to be joining you.
Just to give our viewers just a sense of how or why, going back to November, that deal on the table was rejected. If you could just briefly help us understand why those creditors took that position.
Yeah, so I think I think Zambia has been trying to treat its debt under the G20 Common Framework, and I think the fact that the G20 Common Framework in itself is quite an infant framework, with really no country having successfully restructured its debt besides Zambia that has made some significant progress. So going back to November 2023. We obviously reached an in-principle agreement with our bondholders, our private creditors, but I think this was rejected twice by, first of all, the official creditors and the IMF, and then on second attempt, rejected by the official creditors, but approved by the IMF. So I think, speaking, for the IMF, I think what really prompted the IMF to obviously reject such a deal was obviously issues of trying to see whether Zambia would obviously be able to carry the same debt that we were supposed to start paying back. Then for, I think, the official creditors, it was issues of comparability of treatment, one of the most contentious principles of the G20 Common Framework. So basically trying to imply that countries, or rather creditors, should be able to take somewhat equal losses as they restructure Zambia's debt. So I think broadly, I think the misunderstanding was that the relief that the official creditors had given Zambia were obviously going to imply that for every $1 that they lent Zambia, they were obviously going to be able to receive about 77 or rather 53 cents from every $1 that they lent Zambia, whilst the in-principle agreement that was reached with the private creditors, the Eurobond holders, obviously implied that for every $1 that they lent Zambia, they'll in return receive 73 cents for that. So there was a feeling from the official creditors that the relief that was given to Zambia by the private creditors was not comparable to the relief that they had given themselves. So I think that sent the negotiations back to the table. And I think moving into 2024, we are still in waiting and still remain optimistic.
Well, that's quite interesting. And of course, if there's one thing creditors do not want to hear is the word losses. But I mean, here we are, and they have to, both sides have to find the best deal possible. But in coming back to negotiating table and just listening to the finance minister saying that there is no timeline for a restructuring deal, that doesn't spark much hope or encouragement in terms of reaching a win-win situation. Is that even possible at this point, reaching a win-win situation, something that makes investors, creditors, including China, especially China, I must add, comfortable, to some degree, and also on the Zambian side?
Well, Esther, I think you are right. I think the minister was also right. He was obviously unable to provide a time frame as to when the projected conclusion of the debt restructuring process would be. And I think this has been one of the inefficiencies of the common framework, because it doesn't provide a timeline, as to when negotiations should be done. So as things are now, I think it's mere optimism, and I think the ball is now left in the courts of the creditors to decide Zambia's fate. So I think the onus is on the creditors, because I think, as a country, I think we have done almost everything that we could do in our capacity. And what then remains is for the creditors as well, whilst having the ball in their hands, to obviously play their role and ensure that they obviously accord Zambia a chance to obviously begin to reform, obviously by giving us a debt restructuring deal concluded, if I should say.
Right. Let's talk about the G20 framework for debt treatment. I mean, it sounded, on paper, it sounds like a fantastic idea because obviously debt, when you look across sub-Saharan Africa, debt levels are high and many of the creditors are foreign creditors, so everyone has to come to the table. But in terms of what would you say we're learning? What is Zambia especially learning in terms of the effectiveness of the framework? It's not perfect, and I've heard many of the finance ministers in Europe, even the IMF, allude to that point, that it's not perfect and they would need more creditors to come to the table and show some understanding, if you will, in terms of what the plans that the countries bring to the table, that's the countries who are in debt. But what are you learning in terms of key takeaways from how it's working and how it's actually addressed the issue of negotiating debt?
Okay, so I think lessons for Zambia have been quite several. Picking out a few, I think the most important ones have been that, when a country has a debt that is too high, it makes it difficult to negotiate the treatment of that debt, whether you're on the common framework or outside the common framework. But if you're on the framework, what it basically means is that you are then asking people to write off significant debt so that at least you can begin your journey to obviously improve debt carrying capacity. So I think high levels of debt, I think, have always been problematic to restructure. Another thing that has obviously been a great lesson for Zambia is obviously the issue of the diversified portfolio of creditors. I'm sure you agree with me that Zambia has a diversified pool of creditors. We have the official creditors on board. We have the Eurobond holders. We also have creditors that are new to the scene, like China. And their restructuring terms are somewhat different from what the common framework or from what the traditional restructuring process has obviously encompassed. So in such a case, I think it becomes difficult to coordinate all these creditors. I think some of the challenges that we faced, in the early stages of the common framework were to bring all creditors on board. And I think we saw some resistance from China because China was then trying to question, why multilaterals themselves, like the IMF and the World Bank, were not able to give debt relief as they had requested, other creditors for Zambia. So I think bringing creditors together when they're in a diversified portfolio, I think it becomes quite problematic. Then another key lesson that we have learned is that the common framework, leaves the responsibility of coordinating creditors to data countries rather, like Zambia. So this then means that for data countries, it's quite important to ensure that high levels of international cooperation are maintained, because I think if you are to actually convince your creditor to one of your creditors to come on board, I think you need to have very, very good international relations with them, and also good international cooperation with them. So I think that remains quite important for Zambia.
Now, one way or another, this deal has to close, and everyone will have to come to the table. But let's just, speak hypothetically speaking. Now, what are the potential consequences for Zambia if the country is unable to reach a deal in a reasonable time frame?
Yeah, so I think, the consequences are quite adverse for Zambia, if I should say, because already, the protracted debt restructuring has already, had adverse effects on the Zambian economy. I think, the most significant example I can pick on is, the fact that we are on the G20 common framework means that, we are not able to service our external debt apart from debt that is owed to multilaterals. So already that puts us in a default setting. So meaning that our credit rating, for external debt is in its default status. So that already has implications on the amount of capital in terms of investment that can flow into Zambia, hence affecting, things like our exchange rate. I think the Zambian kwacha has been one of the worst performing currencies in the past few weeks. We've seen how the kwacha has been sliding, and then also, I think reaching its highest today, one US dollar is basically selling at 27 kwacha. I think this is the highest in the history of my memory. Then another thing also is that it then speaks negatively to issues of inflation. So we've seen how inflation has been skyrocketing and the cost of living in general. So many Zambians are actually feeling the pinch. So in the worst case scenario, if Zambia doesn't score in this debt restructuring process, I think what it then means is that we shall maybe continue to be in default status, and that has obviously several implications on investment. We are hoping to get a lot from mining, but I think with the current credit rating that we have, it becomes difficult to even attract the necessary investment in mining, and manufacturing has. So I think we are yet to see how this will unfold.
Right.
But in its worst case scenario, I think it wouldn't be good for the livelihoods of Zambians.
Right, Peter, we have less than 2 minutes to wrap this up. I wanted to speak to, one of the root causes of this, this rising debt we're seeing across the continent, and that's because, many of the capital markets here are shallow. They're not deep enough to meet domestic revenue mobilization needs. What do we need to do to change this so that more of these markets can be developed?
Well, I think Africa in general, rather developing countries in general, like you have rightly put, do suffer from very shallow financial markets. So I think already speaking to issues of diversifying and deepening our financial market would be quite a big thing to talk about, and it's quite a process if you have to do that, because a lot of issues of financial inclusion, financial development to come on board. But I think in the medium term, what we need to do as a continent, as Africa, as Zambia, I think is to obviously diversify. I think Africa being rich in resource base, I think it's quite important to take advantage of our resource base and begin to diversify our economies. I think one major opportunity that presents itself to us is the energy transition, and Africa having almost all the critical minerals that are required in this process. So we can then leverage on this process and begin to diversify and value add to most of the raw materials that we have.
Well, that is absolutely spot on. Thank you so much, Peter, for sharing that insight with us today. We appreciate your time on the show. That was Peter Mumba, Civil Society Debt Alliance, talking about Zambia's debt restructuring challenges. Well, that's it on Business Edge for today. Remember to follow us on social media. We are at News Central TV. From myself and the team, it's bye for now.